Hey everyone, welcome to this week's update. It's the 22nd of June. Just going to give you an update of my profile, some of the activity that's happened over the last week, and some of my ideas around how I'm dealing with volatility, and how I feel in general about the markets overall. So let's get into it. So let's take a look at the portfolio overall. So a few things to note, and let's face it head on, there's been a huge correction, dip, crash, whatever you want to call it in the short term on the Bitcoin market and subsequently the altcoin market. We need to face the facts here. These things can turn bullish to bearish very, very quickly. Look, at the end of the day, nobody really knows what's going to happen in the future. You'll see a lot of information about, people who have significant targets for the price in the short term, but also people who are saying, cryptocurrency is going to go to zero, or it's going to go back down to under 10,000 K. Nobody has a clue what's going to happen. Really, nobody does in the short term. That's the main caveat here. For me, I am in the long term very confident over the future of the crypto space in particularly around Bitcoin as being digital gold, and then the altcoins like Ethereum, Litecoin, EOS, ADA or Cardano, Chainlink. These have significant upside fundamental value that may take longer to be realized than this current market might suggest. Have we been overvalued? Maybe we have a little bit. Have we got to certain heights quicker than we expected? Maybe we have. But that's not to say that this current bull market is finished. I don't think it is for a moment. I think what we've got really is a lot of fear, uncertainty, and doubt in the market, or FUD, as you see a lot of people talk about. This really goes back to, the confidence of what in majority of people, have for the market. Take, for example, the fear and greed index. It's at 10, or it was at 10 yesterday. The last time it was at 10, it was probably 2018. Off the top of my head, I haven't never seen it that low. Does that mean that we're at the end of a market cycle? I really don't think so. During the pandemic last year in March 2020, it was about 10 to 12 in the fear and greed index. That to me was the perfect buying opportunity for the next, 2 years of the cycle. And I bought quite heavily then, because for me, it's always been a long term for crypto. All this short term, FUD, hype, it's all noise. If you're invested in the space, if you believe in the future, if you believe in the value, that's when you invest. It's not, to me, it's not a gamble in the long term at all. And we need to mitigate the risks where we certainly can. So that's what we're doing. Look, I think at the end of the day, I have no problem closing opportunities in the red at all. Like, you could go and look at my history. I've closed out some positions this week as we were coming down from about 40K, because I knew we were going to be testing that 30K range. And we still haven't confirmed if we're going to stay above that or go below it. We're kind of flirting with that support line right now. So for me, just wanted to take some of the exposure off the table, let the market figure itself out, and then take it from there. So that's the crypto piece. What I want to do is I want to let you know why I personally am not worrying, by having a look at the profile, going into a little bit more detail, and giving you an understanding of where my focus will be in other areas of my portfolio. It's never good to hang your hat on one particular asset class. And I personally don't do that anymore, because I've been burned in the past. And the last thing I want to do is go through that process again. So I've learned something. I'm still not perfect, but look, I do my best. So let's crack into the portfolio and take it from there. So really what we're looking at here on the screen is basically the year-to-date performance. We're at about 50% of growth year to date, and people have said, look, you've been lucky with cryptocurrency as a main driver, and maybe I have. Okay, that's fair enough. That's one component of my strategy, however. So to kind of bring a little bit of a picture to that. So if we look at the Nasdaq year to date, we're in around 30%, thereabouts. Now we can look at Bitcoin and we can understand the correlation of my portfolio with Bitcoin. So yes, at the start, as you can see, we've got a pretty close correlation with the Bitcoin price. Now, the difference for me is that, I knew that short-term pump was not going to last forever. And you need to take profits where they're due, and when you believe certain things are frothy, and particularly the markets were frothy at that time. So what I managed to do was to focus a lot more on my diversification strategy. So you'll see that I've invested a lot of time and effort into looking into many different ETFs, many more value stocks. I've reduced exposure to some of my growth stocks in particular. I find a lot of those areas very, very frothy. And to be honest, it's a little bit too much risk that I want to have right now. If we look at S&P, it's a similar enough correlation to the Nasdaq. So if you look at it here, the kind of blended approach, if you had copied me from the start of the year, say for instance, you'd be up about 50%. I know a lot of people copied me around some of these peaks. So what I would say to those people is to hang in there. It's a long process being an investor, and a lot of the time you're going to see a lot of red, and it's going to be tough, and it's not going to be nice. And you will doubt yourself, absolutely. But what I will say is that from my side, I am in this for the long run. Each of my investments I have with the view that, I'm happy to hold some of these for a couple of years. I have a huge cash balance at the moment. I think there's 41.47% of my portfolio in cash. This explains, if we look here, it explains why maybe it's drawdown isn't as sharp as the Bitcoin price. At the moment, if we look, we're probably almost negative on the year for Bitcoin, probably into negative numbers, which we actually are, yeah. So if I'd held Bitcoin the whole way and just went on that strategy, we'd be under at the moment. So we've had 2 red months, and there's no surprises there. Again, if my Bitcoin exposure was larger, we'd be looking at far greater dips here. We'd be looking at about 60%, drawdown overall, which kind of correlates to the price. But yeah, look, it's all part of it. We had a good run up to then. We'd 7 months in the green, almost double-digit growth every month. We gotta be realistic as well. Markets don't go up forever, so we'll take some bad months along the way. As I mentioned, we've got about 40% of our balance in cash. Actually, it's 47% in cash. That means that we have, first of all, we're not exposed as much as we were. In case the market drops in a bit more, particularly on the stock side as well, there's volatility as well in the market that we need to make sure that we're not overexposed on. If we look at the markets that we're involved in, we've got it broken down between stocks and crypto. So like the way that we've worked in the past is we've kind of always had a heavier crypto allocation. But obviously we need to be wary of the market, and we need to make sure that we're not overexposed to any more drawdown. Crypto is, Bitcoin is our largest holding. I've been buying certain positions in Bitcoin. I've actually offloaded quite a few altcoins. I just think that the possibility of downside is far greater on some of the altcoins with some of the smaller market caps. So I've gone I've reduced some, I've trimmed down some of those, and I will buy more Bitcoin once I believe the bottom is in. I'm not sure where it's going yet. I think there's possibility that it could drop more, but we just need to make sure that we have that side covered in a cash balance. And as part of our kind of diversification strategy over the last 2 or 3 months, I've opened quite a big position of the portfolio in DVY, the ETF. So this ETF tracks a catchment of dividend yielding value stocks on the Dow Jones. So it's generally quite a low volatility, lower risk type of ETF. So just looking at exposure overall in the portfolio, this is how the active assets are in my portfolio. So this is taking cash out. Again, it's mainly stocks, ETFs, but still a fairly big portion in cryptocurrency, given the volatility. But that is to obviously have skin in the game if there is a reversal, and that we capture that trend. And if it's the case where, look, we drop under the 30K, we stay under the 30K on the daily chart, we're happy to hold through, and we can reduce trimmings from the portfolio if we need to. But I'm kind of happy to hold with some of these, given the fact that we've already offloaded quite a bit, just to kind of preserve capital as best as possible. The market's topsy-turvy at the moment. It's very volatile. There's a lot of contrarian viewpoints out there. It's not easy dealing with, big red numbers if you're looking at it in the short term. All I can say is that if you believe strongly in the future of what you're investing in, should be no issue. Try take a step back, and take some time out of the markets. I certainly have done that. But again, you got to look at this with a clear head. The market does not care for your emotions at all. It doesn't care if you're losing money. But look, we need to do the best that we can in order to mitigate the risk and preserve capital. I think we will see the back of this in the next few weeks. I think that it's going to take some time, but I will do my utmost best to manage this fund as best as I can. At the end of the day, I have a duty to myself. I have a duty to you guys, to grow this fund as best as possible, but also protect from the downside, which there seems to be a little bit at the moment. But let's figure that out as we go through. Please subscribe to the channel if you haven't, and give the video a like. Chat to you next week.